now, let's put our eyes on the revised guideline for agent banking in Nigeria. I think from April next year, the first day in April next year, we'll see a lot of changes. But I mean, the road to that has already started, and we're expecting at different points in time there to be differences, changes in the way the POS, operates. So let's see what to expect, and perhaps the impact it might have on your operations with them. So let's first of all put our eyes on some of those changes that the Central Bank of Nigeria has introduced or revised in some other places when it comes to agent banking. So we see now that there's mandatory geofencing and geotagging. Fixed location. All POS terminals must be geotagged with GPS coordinates and registered to a specific business and a service location. There's also terminals only permitted to operate within a 10-meter radius. That's the geofencing of their registered location. Activity outside the radius will be automatically flagged, and terminals that are not geotagged will be barred from processing payments. This is supposed to start 60 days from the circular's issue, and the circular was issued August 25, 2025. That's for the geotagging, with compliance check commencing this month, October 2025. The central bank also talked about mandatory geofencing, geotagging, that's what I've talked about. And then there's the single principal exclusivity rule. That's POS agents will be restricted to working with only one principal financial institution, a single bank, a mobile money operator, or super agent. So you can't have multiple. Effective date for this is April 2026. That's every agent for one. And then the transaction limits. There are caps now for customer daily limit. Cash out, cash in, bill payment is 100,000 naira for one customer. Weekly, 500,000 naira. An agent daily cumulative cash out limit is 1.2 million naira per agent. And of course, we know that all of these conversations started with some illegal robbery, kidnapping connected to POS in some places are being used as a smooth way to cash out money. So that's why the CBN has come up with all of this, and there are stricter eligibility prospect for agents to meet the requirement preceding 12 months and having their BVN not flagged or blacklisted. All of those, that's what we're supposed to be seeing from now on. We have the acting president of the Association of Mobile Money and Bank Agents in Nigeria, AMBAN, Dr. Bioha Oti, joining us to help us understand how they are preparing for all of this. Dr. Oti, good morning and welcome to the program.
Good morning.
Great.
Thank you for having me once again.
Good to have you, Dr. Oti. So let's start from the essence of this. So for us as consumers, we've been told by the CBN that these changes are necessary because of the abuse that's come to that sector, the agent banking sector. I wonder if you agree that these changes are necessary to start with.
Of course, I don't have any problem with the central bank for trying to tackle a lot of abuse that we have in the industry. The last time I was here, I highlighted a lot of abuses, especially in the area of fraud and kidnappers cashing in from
I think we lost Dr. Oti there. Oh, okay. Hello, Dr. Oti, can you hear me? Okay, looks like we lost him there. So, okay, Dr. Oti, can you hear me?
I can hear you, definitely.
Okay, we lost you for a bit. So perhaps if you could tell us what you said again about your thoughts on these revised guidelines by the CBN.
Okay, I said that, yeah, I quite agree with the central bank. It is good to find a way to curb all the malpractices, to make sure you restore order and the regulatory compliance within the industry. That's very good. But I have quite a number of reservations also on how the rules will apply, especially as it has to do with this particular new circular that was released on the 6th of October.
Do you want to specify that part, please?
Yes. Basically, nothing much is new in this circular. I think right from the first time we saw the agent banking policy, I think even my association, AMBAN, contributed to reviewing the draft policy as at the time it was sent to us some years back. Though this recent one, we were not, it wasn't sent to us. So nothing much changed, but a few things were introduced. The idea of exclusivity has been there, though not being enforced. Then the limits for transactions has been there, but from time to time the CBN tries to tweak it. Then the sanctions also have been there and all that. But I want to highlight on some of these emphasis on this particular circular as it has to do with agent banking. I appreciate the central bank for doing everything they can in order to curb malpractices within the industry, deal with fraudsters, deal with certain elements that want to abuse the system. That's fine. However, you will agree with me that in the world now, a lot of regulation, by the time you introduce too many regulations, you stifle innovation. One of the promises by Donald Trump, the current American president, during his election was that he wants to reduce regulation as much as possible in order to encourage innovation and entrepreneurship. So, but this year alone, the central bank has consistently been releasing guidelines, policies, and directives, especially as it has to do with agent banking. But my point is, in as much as this is okay, there is a reason behind it. They really want to deal with the bad eggs and all that. But they equally have to bear in mind that they are stifling the entrepreneurship part of it, the innovation part of it, and above all, the ultimate aim of deepening financial inclusion and improving the quality of life of the average Nigerian. So by that, I mean that the central bank now has to engage more. You know, there has to be more conversation, especially with the people that are directly affected by some of these policies, guidelines, and directives, in order to find a more appropriate and practical way in order to make sure that there is balance in between trying to regulate and curb malpractices, and also to make sure that the people you are intending to serve does not suffer unnecessarily.
So, Dr. Ozzy, do you see a situation where, because you talked about the threats to financial inclusion there with some of these guidelines, do you see a situation where that is threatened? Perhaps is it because of the 10-meter radius or the exclusivity? Which of them? And I know also there's also one of the guidelines that says that then POS agents now would have to display their services, have a shop where it's branded and all of that. We know that a lot of the POS agents do not do that. So do you see these as a threat to the financial inclusion and deepening of this financial inclusion that we've been working on?
Okay, I'm going to particularly talk about three things. The first one is the idea of geotagging. Then the second one I'm going to talk about is exclusivity. Then finally, I'll talk about non-permissible activities. Now, let's start from the idea of geotagging. Geotagging is fine. The last time I was here, I emphasized that it is going to help particularly the law enforcement agencies to be able to identify criminal elements that cash out from agent locations, because it's going to pinpoint exactly where this transaction is done on a particular location on the map. So that's very fine. However, we need to understand that our country still has a lot of rural communities. So you will not just adopt rules and regulations that apply in very highly developed cities and expect that it will work 100% in rural communities. For instance, I emphasize about the idea of market days. A lot of villages in the country, they don't have one particular market days, and that makes a typical agent a roving entrepreneur. So on a particular market in a particular city, you go there with your POS terminal, do your transactions. The next other market day, you go to that place. I equally identified drivers that use the POS as a means of collecting their fares. Okay. Now, if a particular POS is geotagged to work only within 10-meter radius of a particular location, all this will not apply. Okay, now, another thing that will have made it a bit more flexible for agents to be able to operate in multiple locations will have been the idea of exclusivity. For instance, if you can collect POS from one principal and then geotag it on a particular location, then collect from another principal and geotag on another different location. So you now have the flexibility to be able to collect from as many principals as possible. Now, there is exclusivity rule, which invalidates that. Okay. Now, exclusivity is fine in certain areas, but generally, it is like introducing monopoly into the system. And you and I know that monopoly restricts the freedom of choice within the market. Now, let's look at a typical agent. In as much as a typical agent is an agent to a principal, and the central bank views an agent as an unlicensed entity that is operating through a licensed entity, that is fine. But we equally need to understand that an agent is an entrepreneur, and an entrepreneur has to be innovative and has to ensure that his business is profitable before even venturing into that business. And if the business is not profitable, the entrepreneur cannot ultimately continue that business. So regulation is fine, but the idea of entrepreneurship should not be less emphasized. Now, when this circular came out, we within our association, we've tried our best to enlighten our people, try to enlighten members of the public, and especially people that are concerned about one idea of it or the other. But generally, I have seen a lot of agents who are thinking of quitting the business because of what they think is going to happen as a result of especially exclusivity. For instance, now, if a particular agent is tied to just one principal at a time, some of the principals, especially the large ones that are well established in the market, can become exploitative. And these are the attributes of a typical monopoly. Okay? And one of the reasons why agents try as much as possible to patronize different principals is because there are different gains to get from one principal at a time. For instance, one particular principal's network may be down, and that should not affect your business as an entrepreneur. It's just like constraining somebody to own just one account in one particular bank. I don't think that would be good enough for the business of a particular businessman. Now, some of these principals, the compensation plan may be better than the other. And a typical agent is a business person because the money you are investing into the business is your capital, and you expect return on your capital. So you want to be profitable. So if you are constrained to work for one particular principal who is not interested in ensuring that you continue to make the desired profit you expect to make, then that is a problem. Now, let's talk about the third one, which is permissible and non-permissible activities. Now, some of the non-permissible activities in this particular circular that was released on the 6th is that agents can no longer open accounts from agent locations. Now, let's think about that. The major essence of financial inclusion is to mass open accounts for so many persons, so many Nigerians, especially where there are no bank locations. How many local governments in Nigeria have bank locations? There are very few of them. Most bank locations are concentrated in the cities, especially the state capitals, and then maybe one or two other commercial towns within the state. So majority of other local government areas don't have bank branches. Now you expect a typical rural dweller to go all the way from the village to the town where these banks are to open accounts. When agents have the flexibility and even now to open accounts and all that, a lot of accounts have been opened in tens of thousands and even hundreds of thousands because agents can go and meet these people in rural places where they are. But with this new circular that account opening is non-permissible in agent location, that's a very big problem. And let me even emphasize this. A lot of agents are already making money from account opening alone. Now, the cash in and cash out activities that is permissible, according to this circular now, there is a limit. An agent cannot do more than 1.2 million a day. And the limit does not only apply to the agent, it equally applies to the customer. So a customer cannot do more than 100,000 a day, including bill payments and associated transactions. So let's just do a simple math. If a typical agent can only do 1.2 million a day, and a customer can only do 100,000 a day, which means you can only attend to 12 customers, all things being equal, if each of the customers are withdrawing to the limit. So that is what I mean by this is going to affect a lot of things. Financial inclusion is going to affect the motivation for agents to continue to operate in the agency banking industry, and even the fintechs, the financial institutions themselves as well.
All right, Dr. Oti. All right, Doctor. It does sound like the CBN is going to have a really hard job finding a balance, dealing with the fraudulent activities, and still keeping the financial inclusion drive on. But I mean, we'll continue to talk about it, and I believe that they will get fresh ideas, on how to balance it. So thank you so much for your time on the program this morning. Acting President of the Association of Mobile Money and Bank Agents in Nigeria, AMBAN, Dr. Obioha Oti.
Thank you for having me.
I will take a break now. When we come back, we'll be discussing project management. Have you heard that the cost of building a road in Nigeria is like double what you have next door Ghana? We'll talk about that and a whole lot more after this break. Please stay with us.